Welcome back. Kunal, we saw the Nifty crossing 26,200. Do you think it will cross the all-time high today?
I think high probability seems to be a good start from the GIFT 50 also 50 points higher. So we are almost at maybe left with 20-25 points to be done throughout the day. So hopefully I think we can do that and just get it done over with.
मतलब.
So I think yeah, I think I'll be very happy to do that.
But there is a sensex expiry also which is there. And yesterday's market, if you see, the entire rally was led by three stocks: Reliance, Infosys, and HDFC Bank. We saw selling in SBI, Bharti, and others, which is there. So even though we have crossed the 26,200, is it a convincing, cross basically which we are doing and breaching that all-time high? Do we have that momentum backing it?
So very good question, Sajid. So to summarize the last 10-15 days, it's been a tough journey for the markets to come back to that 26,000 mark because we've not seen support of mid-cap names, market breadth in the same gusto like what we were in the previous attempts towards 26,000 levels. In fact, yesterday was the first day after I think a span of 10 to 15 trading sessions where the net market breadth, the advances minus decline, was almost 13 to 1400 positive. In every of the previous attempts when the index has closed positive, you either had a market breadth which was negative 300, negative 1100, negative 500, etc. So there was not a market breadth which was positive in the last many days. So that was a relief sign. And that's why yesterday everyone felt, even the portfolios rising, so everyone felt that the markets are now getting in line to break past about the lifetime highs. Now it's a matter of continuity. Now the only concern for our market so far in the last, I think, many weeks or rather 2 months of this trying to attempt this new high is lack of follow through. We've not had any follow through for except for very few sectors. You pinpoint the names of sectors. Only PSU banking stocks have been the ones which have seen a follow through. You look at IT, no major follow through. Realty, no major follow through. FMCG, pharma. I mean, there is hardly any major sectors which have seen a follow through for themselves. So that has been the only lacking part over here. But it's a matter of sentiment. It's a matter of confidence which comes back into the markets. Once confidence comes back, once sentiments improve, all of these nitty-gritties they tend to iron out, and the market gets back into a very straight-lined uptrend.
It's interesting, right? You're saying there's no follow through which is there, but what's going to push this market in that sense? That it's only the top 5 or 6 stocks which are going to go in because we've seen last 30-45 days. These are the only stocks which have led that entire rally as well.
So it's little bit of everything which will probably try and play out in this market. So you had banks and financials, which of course is the major ones which have performed very well. Bank Nifty now closing in towards 59,500, 60,000 mark, which is I think a very very strong breakout for the banking index. Financial services, the non-banking names, they are the ones which have done very well. Short covering in IT, good recovery in pharma stocks, which we've seen. Auto stocks making a comeback. Reliance, L&T is back at an all-time high levels. So there are those odd large cap names which have also done reasonably well for themselves, and I think that's what is the hallmark of this rally. Even though some of them have participated late, some of them probably have participated earlier. There's been short covering in few sectors, underperformance in subsectors which is still persisting, and that's why I think the market texture is a little bit more mixed. But then when you see this large cap breadth improving, like on a day like yesterday, it just gives you a sense that maybe the markets are getting up for a breakout finally of this lifetime high.
Right. So, Kunal, what stock-specific strategies would you choose?
So metals, I think, is making a good comeback. Dollar index now breaking below that 100 levels clearly. So I'll bet on Hindalco as one of the first picks. The stock trying to make a comeback yesterday also. It managed to just eke out about that 800 levels as a breakout. So would look out for 840 as a target for Hindalco. Stop loss at 780. The second would be a Bajaj Auto. Auto stocks making a very strong comeback. We've been highlighting the stock over the last few days. Exceptional move for the stock in the last 2-3 days, where you've seen the stock recovering from 8,800 levels thereabouts to 9,000, 9,200 where it's closed yesterday. So targets of 93.50 for Bajaj Auto, stop loss at 9,000.
Kunal, you were bullish on Bajaj Auto yesterday as well, and the auto index also among Nifty, Bank and Nifty also now being at all-time highs. You did have the auto index that breached an all-time high for itself. How sustainable is that rally looking to you?
I think it's very much sustainable, Sneh, because you are looking at this as a second leg move for the auto stocks. So it started off from the August, mid somewhere on the GST expectations, where you saw the auto stocks making a comeback, many stocks breaking out. It was initially led by just 2 or 3 names, from the auto pack, the likes of Maruti and Eicher Motors. But now it's spread across. You look at Hero MotoCorp, it's come back to its lifetime high levels. You look at Ashok Leyland, it's back towards closer to its lifetime highs at 148.50 mark. There are many stocks in the auto pack which has been doing very well. And I think that's the reason why I would believe that this could be a more sustainable rally for many of these auto names.
Okay, let's talk stocks and let me take it across to Ashesha to get a list of all the newsmakers this morning.
Well, yes, first up, let's talk about Whirlpool, where the promoters are looking to offload about 7.5% stake in the company, and the total transaction is likely to stand at about 965 odd crores. The floor price for this deal is fixed at about 1,030 rupees per share. So on the back of this block deal, which is likely to happen today, keep an eye out on Whirlpool. Paytm, meanwhile, positive news though coming in over here, where the company has received Reserve Bank of India's approval and certificate of authorization. This is for company's arm Paytm Payments to operate as a payment aggregator. So now the company has gone ahead and received RBI's approval. So it's an important step for them. Paytm in focus on the back of this. Jammu and Kashmir Bank, meanwhile, on the back of their fundraising plans, the company said that they are looking to raise about 1,250 odd crores. This will be done via QIP. Oberoi Realty has signed a development agreement to redevelop a 4,700 meter plot. This is in Nepansi Road. So yes, positive development coming in for Oberoi Realty as well. Wipro has forged a strategic alliance with a global company. This is for advanced innovation and frontier technology. So yes, positive development coming in for this IT company as well. Pidilite Ventures, which is a wholly owned subsidiary of Pidilite, has announced a strategic investment in Magic Decor. Now the company says that this is to scale premium bespoke home decor and expand distribution network as well. So yes, positive development coming in for Pidilite as well. Lastly, Ashoka Buildcon, the company's arm Ashoka Concessions, has sold about 5 SPVs. This is to Maple Infrastructure Trust for about 1,814 crores. On the back of this transaction, Ashoka Buildcon will also be in focus today.
Okay, lots of other stocks and Infosys as well, Sajid, would be on that list. The buyback is done with.
Yeah, I mean, yesterday we saw good demand coming for the buyback, right? 8.2 times the book. 1,800 crores per share, 10 crore shares on the block with respect to buyback, which is nearly 2.4% of equity for Infosys. But what we saw was the maximum kind of bids that came in from was institutions. Nearly 78, 79 crore of the 83 odd crore shares that got tendered. Or the bids got tendered came from the institutions with mutual funds accounting for nearly 40-45 crore of share of those shares. So large institutional participation coming in, and as we were saying, there is an issue with respect to small investors participating here because the buyback amount or buyback price which will be received by the small investors will be treated as a deemed dividend, and then you will be taxed at the tax slab at which you are at the moment. So the demand coming in from small and medium small and medium investors were very muted. I mean, 2 to 3 crore shares of that demand coming in. If you at the entitlement ratio going into the buyback, it was around 2 shares for every 11, and for the general investors it was around 17 shares for every 706 shares. So you've seen a run up happening in Infosys going into the buyback. Once the shares get credited and debited, and the remaining gets back comes back to the shareholders, whether it's mutual fund or institution or small shareholders, you're going to see some kind of correction that can come in, right? Kunal, do you see this factor impacting Infosys price going forward? Because nearly 83 crore shares are now blocked for the buyback, and by the time it gets completed and the shares are returned back to the shareholders, there could be some correction or profit booking which can come in.
Yeah, the stock could remain into a range over here, but as it is, Infosys was not a high-performing stock in the large-cap IT name. It was almost like number 3 or number 4 in terms of the price performance. But the chart patterns are still very strong. The bottom which has been formed for Infosys at the 1440 levels, I think, has been very formidable. The stock has already cushioned or developed a cushion of almost 120 points from that 1440 mark. That I believe is the positive for Infosys. So yes, there could be some bit of volatility which the stock may see over the next few days or the next couple of trading sessions. But then broadly, that 1440 mark has been a major support, which the stock has established over the last many months.
Okay, but which other stocks are going to be in focus today other than the ones that Rashisha just highlighted? Let me take it across to Kanishka, who's waiting by with a list of all the stocks to watch out for today.
That's right. So lots of stocks to watch out for. Let's start with Patel Engineering, which has bagged a major order. It's a big order win coming for Patel Engineering, nearly 800 crore rupees. It's an order for coal excavation and transport projects from SECL. So we'll wait out for how the stock reacts to it. It's a major order win for this company. Next up on the list is Asian Paints. Another positive news flow here. It's Berger Paints Emirates, which is a subsidiary. It has planned a second plant worth 340 crore rupees investments in Abu Dhabi. That's a very significant development for this one. And initial production capacity is going to be 55,800 kiloliters per year. That's the word coming from the company, and we'll wait out for how the stock reacts to this latest development. A big one for this one. Next up on the list, NACL Industries. The board is going to consider a fundraising on December 1st. That's the announcement that they have made, so we'll watch out for this one as well. Next up, Muthoot Microfinance. This one, the board is going to consider a fundraising today, so we'll wait out for when the announcement comes and what kind of moves the stock is going to see on the back of this development. Next up, Panacea Biotech. This one is in focus on the back of a management update that we have. Devendra Gupta has resigned as the CFO of the company, and we'll wait out for the next announcement on who takes up the position next and how the stock reacts to this resignation. Then we have Brigade Enterprises. This one on the back of a lease that the company has signed. 4.8 acres of land with electronics technology parks for the development of IT infrastructure in Technopark Phase 1 of Kerala. So that's the latest development we are tracking. This is a lease for about 90 years. So we'll see how the stock reacts to this one as well. Next up on the list, lastly, there is Studs Accessories. A healthy set of numbers is what the company has reported. 6.5% of revenue growth on a year-on-year basis. EBITDA has gone up 12% as well. Margins are very steady. Healthy margin gain of 90 basis points coming in at 19.3%, whereas the PAT, that has also seen a growth of about 18% on a year-on-year basis. Now, the company has seen demand across core categories, which remained healthy. They're also progressing with capacity expansion with the first phase of additional capacity of 1.5 million units expected to become operational by the first quarter of FY27. That's the latest update that the company has shared alongside their very healthy set of numbers. So these are all the stocks that we're watching out for today.
Okay, that's a bunch of stocks to look out for. But Kunal, let's talk about the market breadth yesterday, right? And we were talking about as to how after many days you're finally seeing the breadth open up, almost 1,500 names which were standing to the green. Should we clock the all-time high, and hopefully today, do you see this further getting accelerated, the broadening of the market that is?
Yeah, it should improve, going forward. At least net market breadth, which was negative since the last, I think, couple of weeks, that should start to improve. And with every, previous times also when the markets had made a new high or just closer to the new high, the market breadth had started to open. That tells you that the market is going to a zone of confidence when it heads into a breakout. Now, yesterday was one of the first days which we saw that confidence coming back into the markets. If we see more confidence building up, then you are looking at the index sustaining this new high. So we don't want that the index just hits the new high and then comes back again, consolidates, comes back to 26,000. That tells you that the market is still not ready for a gung-ho kind of a move. But if the market breadth continues to open up, improves gradually also, that's a sign that we are looking at build-up beyond the life highs for the indices.
Kunal, we spoke about tech stocks briefly. Do you think that yeah, you spoke about Infosys, but what about the other stocks like a TCS, or for that matter, a Wipro or others? Means we are seeing these stocks still languishing. Means they're still in correction mode, 20-25% corrected from the tops. Do you see a run up here for them?
Yeah, it's the highest underperforming sector, worst underperforming sector, the Nifty IT names over the last many months. And every time when we see a recovery happening for a sector, the initial bout of sector recovery is always made by made with very few select large cap names, which tend to make comeback for themselves. So in this leg, for example, you're seeing Tech Mahindra and HCL Tech to be among the better performers from the large cap IT names, followed by Persistent and a co in the mid cap IT names. But then most of the other sector, other stocks within the space, I think TCS, if I'm not wrong, Wipro also, both of these stocks on the larger cap IT stocks are trading sub their 200 moving averages. So that's acting as a more like a drag for the entire Nifty IT space. When will these stocks recover? I don't see that happening in the first leg of the price recovery. Generally the second leg of the price recovery meets with a lot of events and news flow which comes positive. So assuming if say in the next couple of months you start to see news flow improving for the IT names, that's where you'll start to see the names like TCS and Wipro going into a zone of breakout and outperformance, or at least trying to catch up with the underperformance with respect to the peers. So it's like a staged rally, a relay race which goes on when a trend picks up. Initially, very few leaders which tend to participate separate from the other stocks, and then eventually, once the news flow gets aligned, you see many of the other stocks participating and trying to make a comeback.
Right. Okay, on that note, let's take a very quick break. When we come back, our stock chat continues.